Good day, YouTube. This is Jay Money with Falling Forward Financial. Was researching a stock and come across this article and thought, since it's in the morning on a trading day and since the stock market's been kind of all over the place with a couple different stocks, thought this would be an interesting article. This is Dow Stocks Like Microsoft, Apple, Disney, Verizon Reveal Two Sides of the market. So I've noticed that as well, doing some trading and looking at my account. There's definitely some tech that's going up and some other that's going down. But after a brutal 2022 in the stock market, 2023 is roaring. Nasdaq is up 26%, S&P up 11% year to date. And so we're just going to dig a little deeper. And some price action. 6 of the 30 components of the Dow Jones are within 5% of their 52-week lows, and 8 are within 5% of the 52-week highs as of Friday, as of close. So, again, the only word I can say on that is it's good to diversify. So, I diversify into quite a few different things. We'll go over a list here. I think only 2 of them on the list I do not have. But again, I don't give tax, legal, or trading advice, just stating my opinion. But isn't the first time we've seen the stock market where certain sectors are doing well while others are performing badly. 2020, many small cap stock left oil and gas and financials in the dust. In 2022, value stocks did much better than growth stocks, particularly large cap value. And so we're going to take a look at the 14 Dow stocks. First is Amgen. You can see the current price at $216.93, so it's closer to the lows. Verizon, 35. I've been buying some Verizon in the $34 range as of lately. Just been buying it, reducing my cost basis because I've been watching it since it was 52, but it's closer to the lows. 3M is closer to the lows, 1.7%. Walgreens, I've been buying some of that. I should have sold it in the 35s. I think my cost basis is 31 and change, which I thought was good up until recently, so I might have to buy some more just to lower that. But thought about parting ways with it, but I just got a nice dividend from it. Johnson & Johnson, definitely closer to the lows, 2.8% away. Walt Disney, should have dumped it in the 110s. It's closer to the lows, 5% away. Microsoft, way closer to the highs, 0.2%. And Salesforce, same, closer to the highs. Apple, 175, closer to the highs. In one of my accounts, I have a cost basis of 120 or 118. I wish I would have bought more at those prices, but I haven't added to that position in that particular account either, so I've just been kind of letting it sit there. McDonald's, definitely closer to the highs. Visa, always closer to the highs. It's a slow and steady, never really goes down. If it does, it doesn't go down that much. JP Morgan, I don't have any of this one. It's almost in between, but closer to the highs. Cisco, have a little bit of Cisco, a little bit closer to the highs, 5.1% away. And Walmart, closer to the highs, 5.3% away. So I think the only ones on the list I don't have is, I think I have a little bit of Amgen and JP Morgan. You can list in the comments which is your favorite out of these. But as you can tell by the names in the table, in 2023 is far more nuanced than years past. Retail as a whole is under pressure, but Walmart is within 5% of the 52-week high, while Target, I thought was interesting, is within 5% of its 52-week low. Similarly, McDonald's is within 5% of a 52-week high, while many other large cap value peers have sold off. 3M is an industrial conglomerate near its 10-year low. Ouch. While Boeing is within 10% of the 52-week high. I wish Boeing would go up a little bit more. I've thought about selling it because my cost basis is still, I think it's in the 200s. My cost basis is in the high 200s. So I've bought it and haven't added to it, and it's down. So as far as the sector trend goes, go tech and financial stocks are generally doing quite well, while healthcare and many other cyclical stocks have sold off. This explains some of the weakness in J&J, Amgen, and Walgreens. And then there's Walt Disney, which despite being in the market outperforming, a consumer discretionary sector is hovering around an 8-year low. Ouch. Microsoft continues to find itself in the spotlight, mainly due to investments in artificial intelligence. AI, Microsoft is now knocking on the door of a $2.5 trillion market cap. Meanwhile, Apple has been a consistent performer and finds its stock near all-time high and approaching $3 trillion market cap, despite fears of slower consumer spending. I just did a video on them. Probably doing some more to break down that video, but all kinds of new stuff coming out from Apple. You'll have to watch that stock as of yesterday. Salesforce was the worst Dow stock in 2022 when it fell 48%. However, Salesforce has been the best performing Dow stock so far this year and is up about 60% year to date. So if you got in, you could have bought and held it or sell it and you got that money back. But that's in a perfect world. Market sense, bull markets and bear markets include some combination of sector rotation. In bear markets, investors tend to gravitate toward safe stocks like utilities, consumer staples, and healthcare. Bull markets, investors want to take more risk and more potential reward and may sell positions in stodgier names, bet on growth trends like AI. I've done a video or two on NVIDIA. Everything's just been AI here as of lately. For example, Walmart has done a much better job of maintaining strong margins and navigating inventory challenges than Target. Disney is undergoing restructuring, steep cost cuts, and layoffs. Beyond that, the company has yet to show consistent profitability as Disney and a streaming service. So Disney stock is near lows while Netflix is at a 52-week high. Again, diversified. 3M's failure has projections. The product liability and environment woes have led to a further sell-off. J&J is undergoing restructuring of its own, spinning off of its personal care business, and Verizon has continued to lose market share to T-Mobile and AT&T. I've been buying AT&T as well. I've made far bigger return on T-Mobile, but they do not have a dividend, leading investors to dump shares in favor of those of its competitors, and the list goes on. The divergence between winners and losers means that the Dow stocks are either drastically beating or significantly underperforming the Dow's year-to-year decline of more than 3%. So here we have gain or loss. This is American Express. I'll see how many of these I know. It's up. Amgen is down. Apple, of course, is up. Boeing is up. Caterpillar is down. Cisco is up. Chevron is down. I think this is Goldman Sachs. That's down. Home Depot down. Honeywell down. IBM down. Intel. I've thought about buying some more Intel since it's been down, but you don't get much appreciation, but it's got a decent dividend. J&J is down. Coke is down. JP Morgan up. McDonald's up. 3M down. I think this is Markel maybe. Microsoft positive. Nike is down. Procter & Gamble is up. I'm not sure what TRV, but that's down. United Healthcare down. CRM Wow, that's probably the best one on the list. Verizon is down, Visa is up, Walgreens is down, Disney just barely positive, and Dow 1%. So don't take any of the price action for granted. One in tune with the market's temperament, investor sentiment at any given time can lead to some stocks becoming overvalued and underappreciated bargains almost at a random. Meme and unprofitable growth stock boom in 2020 and 2021 is an example of unrealistic enthusiasm, while the collapse in big tech stocks in 2022 and subsequent rebound in 2023 may be an example of the market reckoning and overshooting. And so here's some questions about the new highs. What is the stock heavily in favor of right now? Does the future growth potential justify the recent price action? And what would happen if the fundamentals weakened? And if the stock price for perfection, or is there room for error? And here's ones making new lows for you to think about. So what is the stock out of favor right now? Why is it out? Is the company showing meaningful progress towards regaining shareholder trust, or as investors merely hoping the company turns things around? Is the stock priced for more disappointment? And if so, most of the negative sentiment is already tailored in. And that is it for this article. Feel free to pause and go over the rest there if you would like. But I just thought that was a real interesting list to go over. Like I said, you can list whichever ones of these that you have and which is your favorite on the list right now. So I think Microsoft, you got the biggest return, so 56%. Well, Salesforce is up there. Apple's up there as well, so. But Salesforce looks like the top one, closest to the highs. I already said that better backwards. I was looking at the lows. So the ones on the highs, closest is Microsoft at 0.2, Salesforce and Apple's in there. It's just the same as opposed to looking at it backwards. But if you have Microsoft, Salesforce, or Apple, or any of them on the list, go ahead and list that, your cost basis. That'd be interesting to know. And like I said, just an interesting article. I'll be working on some other videos here shortly. And if you, again, I don't give tax, legal, or trading advice, just stating my opinion. If you haven't smashed that like button yet, just go ahead and hit that for me, as well as smashing the bell, and we'll see you on the next one. Again, I thank you for watching. Happy trading, happy investing, stay green. Cheers.